Ever felt like investing was this exclusive club with velvet ropes and complicated jargon? Like you needed a trust fund and a Wall Street degree just to get your foot in the door? What if I told you there's a way to start investing with the spare change from your daily coffee? Sounds intriguing, right? That's the world Acorns is trying to build, a world where investing is accessible to everyone, regardless of their financial background or the size of their bank account. But how exactly do they do it? What's the magic behind those Acorns investment portfolios that are attracting millions of users, especially those who are just starting their investment journey? Well, that's precisely what we're diving into today. We're going to unpack the nuts and bolts, pun intended, of Acorns investment strategies, explore the different portfolio options they offer, and ultimately help you understand if Acorns might be the right fit for your financial goals. Before we get into the specifics, let's paint a quick picture of the problem Acorns is trying to solve. For many, the idea of investing can feel overwhelming. Where do you even begin? Which stocks or bonds should you choose? How much money do you need to get started? These are all valid questions, and the traditional investment landscape often doesn't provide easy or affordable answers for the average person. This is where Acorns steps in. They've simplified the process, making it incredibly easy to start investing, often with just a few dollars. Their core concept revolves around roundups. You link your debit and credit cards to the Acorns app, and every time you make a purchase, Acorns rounds up the transaction to the nearest dollar and invests that spare change for you. Think of it as automatically saving and investing without even really noticing. But the roundups are just the entry point. The real engine of your investment growth lies in the carefully constructed portfolios that Acorns offers. These aren't random selections of stocks and bonds. They're thoughtfully designed and managed by financial professionals to align with different levels of risk tolerance and investment goals. So, what are these portfolios actually made of? At their heart, Acorns utilizes exchange-traded funds, or ETFs. Now, ETFs might sound like more financial jargon, but they're actually quite simple and a powerful tool for diversification. Think of an ETF like a basket that holds a variety of different stocks or bonds. Instead of buying individual shares of many different companies, which can be expensive and time-consuming, you can buy a single share of an ETF that represents a whole sector of the market or a specific asset class. Acorns primarily uses ETFs managed by Vanguard and iShares, two of the largest and most reputable investment management companies in the world. These ETFs are known for their low expense ratios, meaning the fees associated with managing them are relatively small, which is crucial for maximizing your long-term returns. Now, let's talk about the different portfolio options Acorns provides. They understand that not everyone has the same comfort level with risk or the same time horizon for their investments. A young professional saving for retirement might be comfortable with more risk for potentially higher returns over the long term, while someone closer to retirement might prefer a more conservative approach to preserve capital. To cater to these diverse needs, Acorns offers 5 main core portfolios, ranging from conservative to aggressive. Conservative portfolio. This portfolio is designed for those who prioritize preserving their capital and are less comfortable with market fluctuations. It typically has a higher allocation to bonds, which are generally considered less volatile than stocks. While the potential for high returns might be lower, the risk of significant losses is also reduced. Moderately conservative portfolio. This option strikes a balance between growth and capital preservation. It includes a mix of both stocks and bonds, aiming for moderate growth with a slightly higher level of risk than the conservative portfolio. Moderate portfolio. This is often considered a well-balanced approach, with a more even split between stocks and bonds. It seeks to provide a reasonable level of growth while still managing risk. This portfolio might be suitable for investors with a medium-term investment horizon and a moderate risk tolerance. Moderately aggressive portfolio. This portfolio leans more heavily towards stocks, aiming for higher potential growth over the long term. While it offers the possibility of greater returns, it also comes with a higher level of market volatility. This option might be attractive to younger investors with a longer time horizon who can stomach potential short-term fluctuations. Aggressive portfolio. This portfolio is predominantly invested in stocks, seeking maximum potential growth. It carries the highest level of risk, as stock markets can experience significant ups and downs. This option is typically recommended for younger investors with a long time horizon who are comfortable with market volatility and are aiming for substantial long-term growth. Within each of these core portfolios, Acorns strategically allocates your investments across different ETFs that represent various segments of the market. For example, a more aggressive portfolio might have a higher allocation to ETFs that track the performance of large-cap U.S. companies, small-cap U.S. companies, and international stocks. A more conservative portfolio, on the other hand, would likely have a larger allocation to ETFs that invest in government and corporate bonds. It's important to note that Acorns doesn't just set up your portfolio and leave it. They actively manage it for you through a process called rebalancing. Market conditions are constantly changing, and over time, your initial asset allocation might drift away from your target. For example, if stocks perform exceptionally well, your portfolio might become overweight in stocks, potentially increasing your overall risk. To address this, Acorns automatically buys and sells assets within your portfolio to bring it back in line with your chosen allocation. This ensures that your portfolio remains aligned with your risk tolerance and investment goals over time, without you having to actively monitor and make changes yourself. This hands-off approach is a significant benefit for beginner investors who might not have the time or expertise to manage their portfolios regularly. Beyond the core portfolios, Acorns also offers other features that enhance the investment experience. For example, they have Later, which allows you to invest for retirement through IRA accounts, traditional, Roth, and SEP. The portfolio options within Later are the same as the core investment accounts, allowing you to choose a risk level that aligns with your retirement timeline. Another interesting feature is Spend, which offers a checking account with a debit card that seamlessly integrates with your investment account. This makes the roundup process even smoother. They also have Earn, which provides opportunities to earn bonus investments when you shop with participating brands. Furthermore, Acorns provides educational resources within their app to help users understand the basics of investing. With that said, thanks for watching, and until next time.